What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell for me so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, and I do not offer an investment trading program. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks. When you open a new Webull brokerage account, put at least 1 penny in that account. They're going to give you up to 12 free stocks. There's a link down in the description box of the video. If you're interested in that Webull offer, click on that link. Open up that new Webull account today. Go get that free stock. Go get that free money. There are 4 reasons why I believe real estate investors could not successfully buy real estate in 2021 and 2022. Those 4 reasons are high prices, high borrowing costs, more competition, and then last but not least, the economy, high inflation. But in 2023, you will have an opportunity as a real estate investor to get back in the game. And here's why. Inventory is going to go up. And what does that mean? When inventory goes up and demand is met, typically home prices will start to stabilize and hopefully slightly come down. If that happens, that gives us an opportunity to be able to go in now and buy real estate at good prices. We still got to be careful though. We can't make a deal work unless what happens? Cash flow happens. So cash flow still should be our number one driver, whether we buy real estate for investment or not. Prices are important, right? Because we want to pay a fair price. We don't want to continue paying escalating prices. But like I said, though, I think with more inventory coming on the market, that's going to keep prices stable or hopefully come down. That will also help with competition, right? Because the more properties that are out there, then there's more opportunity for us to find the right rental property for us, right? So that helps with competition. Now, borrowing costs, I believe, will still continue to be high, right? Because inflation is high. And the Federal Reserve has already said that they're going to continue to be hawkish on inflation. So they're going to continue raising short-term interest rates in 2023. So I don't think our borrowing costs is going to get any better. You're probably looking at interest rate range of around 6% to 7% for your 30-year fixed rate mortgage rates. The economy. Don't know if that's going to get better or not in 2023, guys. That will depend on what? Inflation. Now, over the last couple of months, October, November, the CPI report has shown that inflation is slightly coming down. Hopefully that will continue in 2023. Now let's talk about some things that we need to have in place before we can even start looking to buy 1 to 4 family or residential properties for income. The first thing you got to have in place, guys, is you got to have verifiable what? Income. You got to be able to prove to a lender you have consistent income coming in. And most lenders are going to want 2 years of your most recent personal tax returns and or business tax returns to verify your income. So you got to have your tax returns in order. The second thing you're going to need to have is decent credit. Normally, decent credit to me means at least a 670 credit score, no major, no minor derogatories on your credit report. That means you can't have all these 30-day lates, can't have all these charge-offs. You got to have all that buttoned down and cleaned up, or you got to have explanations of why that stuff is on your credit report. The third thing you're going to need is some down payment money, right? No lender is going to take 95% of the deal and you put in only 5% unless it's a FHA, first time home buyers deal, or like a VA deal. Then in those two instances, yes, you can get away with putting down less than 5%. But in a normal conventional situation, most of those lenders are going to want you to put down anywhere from 10% to 20% down payment. The fourth thing you're going to need is a really good real estate professional to help you find the right property for you. If you got those four things in order, now the next step is what? Location. You got to figure out where you want to buy this property at. And then you got to figure out what type of property you want to buy. Do you want to buy a single family home? Do you want to buy a duplex? Do you want to buy a threeplex or a fourplex? Remember, 1 to 4 dwelling, you can get a 30-year fixed rate mortgage for those types of properties. So that makes it really nice from a financing standpoint. You're going to probably still pay 6% to 7% just because of where we're at with inflation. But again, if the cash flow supports it and you're willing to keep that property long term, you should be okay. And long term to me is I need to be prepared to keep that property from 5 to 10 years in the environment we're in now, right? But again, though, guys, if you buy it in the right location, you get the 30-year fixed rate mortgage, and the cash flow works, then I think it's a good investment for you because the stock market will still be down in 2023, guys. And again, you guys know my number one way to build wealth is the stock market, right? So I'm not replacing that with real estate. My number one way to build wealth is in the stock market in 2023 by buying ETFs in index funds, S&P 500, total stock market ETFs, and just dollar cost averaging in. But if you're someone who says, Richard, I'm already doing that, or I just don't want to do that, I want another asset class I can invest in, then the second asset class in 2023, in my opinion, would be real estate. And then the third one would be investing in a business. Because you guys know, in my opinion, the best time to start a business is when? In a recession. Why? Because less competition. Nobody wants to start a business in a recession in most cases. That's why I encourage people who have products or services that can solve problems for people to start your business when the economy is down because it's less competition. And the good thing about that is once you get that business up and running and then the economy turns around and everybody else is starting to race to try to start businesses, you already established, you already got a customer base, you're already moving, right? You already making money. Drop me some comments, guys, down in the comment box and let me know what you think about real estate investing in 2023. Do you believe prices will level out or start coming down, right? I think they will because I think we're going to have more inventory hitting the market. We already are. Home builders are set to produce or build 1 million homes over the next several years, guys. That's a lot more inventory coming in, which in my opinion, more inventory we have as investors, better for us because we can get better prices, right? It becomes more of a buyer's market at that point instead of a seller's market. So more inventory is going to be helpful for us. It's also going to help us with what? Competition, right? Now, it won't help us again. Like I said, it won't help us with the borrowing costs. They're going to still be pretty high just because of inflation. But again, though, cash flow, cash flow, cash flow, right? We got to be able to look at that property, figure out what the gross rental income is going to be. We need to also figure out what our expenses are going to be. And then what's left is our cash flow. That's our net profit, right? But now in our expenses, we also got to add in our borrowing costs, right? Our normal expenses are going to be property insurance, repair and maintenance, property taxes. But then our borrowing costs have to go in there too if we're going to go to a bank and get a loan to buy that property. So we got to make sure we include that in our expenses. But if our gross rental income minus our gross expenses should give us a positive cash flow or a positive net income. And then I got to think to myself, what type of return do I want on my money? So if I buy a $400,000 house and I got to put 20% down, right? So I got to put $80,000 down and I go to the bank and get a loan for $320,000. I have $80,000 in that deal. What type of return do I want on that $80,000? That's my cash on cash return. And for me personally, guys, I need at least a 10% return on that $80,000. I need to have net income of about $8,000 for that property for the year in order for me to meet my cash on cash return of 10%. So that's the exercise you need to go through when you're thinking about buying rental property. Is you got to look at that rental income, top line rental income. You got to look at those expenses, including your borrowing costs. And then you got to figure out, okay, is this cash flow or this net profit positive? And if it's positive, is it giving me at least a 10% return on the money that I actually put into the deal, my 20% I put into the deal? If it's positive and if it's doing that, I think it's a good deal. And then you just got to hold the property 5 or 10 years. You're going to get cash flow. You're going to get appreciation if you bought it in the right location, which I think at that point, man, it's a good deal for you. And then you just duplicate that process every 2 years. That's what I did when I was building my real estate book of business, guys, over the last 25 years. If you want those 12 free stocks from Webull, guys, click on that link down in the description box. Open up that Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.